okay, I'm not paying away that much to be long the bunds, it's narrowed. And it may, if you go back and look, I have an 8-year chart that somebody sent me. The low back in 2011 on this differential was actually negative 29. So you got 29 basis point more yield on a bund, nominal terms. But we can go back and look and go, well, where was the currency then? Because that was back in November of 2011. It's good to look at these, relative.
Hey, we're almost at 150 in the euro.
Right.
Can I offer a different perspective, Ara?
Sure, absolutely. That's what this is all about. Absolutely.
And actually, I've learned it from you in the last 2 weeks. I think, and I wasn't here the previous year or two, or you guys have done this. I think the fact that, as you've talked about, and I listened to your podcast and read your blogs and stuff, the fact that they agreed on the weekend before last, the euro may go back to behaving like it used to do, like the Deutschmark used to do, as a currency you go to in a risk off. Where do you go?
Yeah, because you've taken away the existential threat.
Correct.
That's
so
the discussion, right?
And I think last night you saw that with the euro going up and the yen went up and the commodity currency. Look, I'm not suggesting this game's over yet, but yeah, by and large, it's kind of showing some signs. The S&P is definitely, and the Russell's definitely behaving better than Nasdaq has in the last 5 or 6 sessions. But I if I need to go and find a currency to hide in to sell, the euro is behaving much stronger than it used to. 3 or 4 years in the past, it was a bitch. You couldn't rely on it.
No, right. Well, it had existential issues, and you had to get a premium, meaning that that the risk premium needed to be higher. So, who was going to pay $1.20 when if I want to buy the euro, I'm going to buy it cheaper because there is a risk to it of its existential, whether it's Germany leaving or the weaker ones leaving. Then the outcomes are vastly different because and I asked the question over and over in the blog over the last 10 years. Whose currency is it? Is the euro Germany's currency? Or is the euro the Mediterranean, or at one time what they were called the pigs, which was very derogatory, but Portugal, Italy, Ireland, Greece, and Spain. But whose currency is it? And if it was the German currency, well, then people would be more comfortable. But if the fear was that the Germans were going to leave, then you want long whatever would come out and really short the basket of European, which would be the euro, and you would have basically a Deutschmark again. And people laugh at me all they want, but I'm looking right now. I can call up, and Judd can do this. He can put the chart up of the Deutschmark on you can. Well, CQG synthetically keeps it going. What the Deutsche.
I love that.
Hold on. Well, I want to give it to me. Oh, just gave it to me on the.
I mean, as you're doing that, Judd, and before you go on, Hira, the great man Howard always used to make me write down the dates that any significant event occurred, because that date often the price never goes under or over.
January 1st, 1999, when the euro launched. Okay.
Yep.
You can go back and say where was it? Well, they all had that fixed valuation. That's what made the euro possible. And we know that on
was it 99 or 98 or wherever that was? Here, where's the D mark?
January 1st, 1999, the euro commenced as a currency. So you look, So the Deutschmark closed December 31st, 1998 at 1.6666. Do with it as you may, you devil worshippers, but 1.66. But the fixed value, I believe,
Yeah,
was
right there. There it is.
the fixed value, I believe, was 1.685 or 1.6875. Andrew, there was a bank guy who I absolutely have some of the greatest respect for, Harris Marcus. Did you know Harris Marcus at Citibank?
I know the name. I've never met him. No.
What a, I mean, and then he went to the Bank of Greece. Harris is a brilliant guy and brilliant. And he worked on the, when the ECU, he was on that committee. Very, very, very bright guy. So, I mean, we used to sit and discuss this and the valuations, and these valuations were not done happenstance, by the way. So that's why they still have, Howard's 100% right. Dates like that do have significance. But I mean, it's just again, to give you context and perspective as to where we are. You know, for everybody says, oh, we're nowhere really in terms of currencies. Nowhere.
Well, no. I think you're understating that a lot, because I think in the last 2 or 3 days, it showed today to me, and I think the next week we'll know a little more.
Yeah.
If we get a little risk-off event, I don't know what that even means anymore, and the euro stays strong in that, and it stays above the low of the week, the weekend of the agreement.
Yeah.
I think we'll know more how that will become more a holder of a constant asset or currency.
Yeah, there's no question. But, you know, as I've stated over and over again for the last 2 weeks, the yen to me is a critical currency, because if the yen doesn't go, then it's really not a dollar move. It'd be like you're reallocating from NASDAQ to S&Ps. People would start reallocating some of their reserves from dollar to euro because the existential threat was gone. And John Others has written pieces of late talking about, from other people's work, you know, measuring that the euro based on that would be 16% undervalued, you know, all kinds of ways to play with it. But if you get a consolidated move, and I don't mean just looking at the dollar index, because unfortunately the yen doesn't carry enough weight in the dollar index for my liking, you know, for every way that they filter it. But if you really are going to get a move away from the dollar, the yen had to go with it. So yes, for the last 36 hours, I view the yen movements as very interesting, especially because it's still a bank holiday today in Japan, or, you know, last night. So we've had them closed for 2 days, but Wednesday sell off in the yen, you know, down to, well, in the futures prices, what, 93?
93 and a quarter.
Right. Now I was going to say 93 and a quarter. And then yesterday, the fact that it turned into the strongest currency the day after getting, and we talked about the euro yen, basically 200-week moving average, and running into some pretty sound resistance there, as it should have. You know, those mean reversion moving averages are really, they do some really good work in their own right. So we had one yesterday, and you can look. I want to see if the euro yen can close actually lower on the week. I don't think it can. That'd be a.
But let me ask you a question, Ari. If the dollar yen ends up, you know, down here or lower, the euro's and the Aussie's down a bit, and the Aussie closes down lower on the week, and the CAD is lower on the week, and the stocks are lower on the week, do you consider that a dollar move, or do you consider that a risk-off move?
I would consider it a dollar move.
Really?
Yeah, because the Aussie's done a lot of work here, and copper has definitely run into some resistance, because the move has been, you know, since May and June, the move in copper has been nothing short of spectacular. I think it's been about.
Yeah, and 3 is massive in the copper.
Yeah,
Just
just
you.
yeah, it's a big
Well,
number.
I think you'd hate me to be part of this room to always agree with you, so I'll push back. I would argue, including some of the VIX expiries, that again I'm putting what I wish they did better as opposed to what we need to do to make money.
Right.
I, I if the board sets up that way, um, and this is the reason why I was holding gold in one, because I just kind of like the idea of just getting the dollar out of the fight between the two of them, and just take the gold in. It does look to me like when the S&P and the Nasdaq had a fight and did a key reversal, that it's seemingly that has been the leader.
Okay.
And
Listen, Andrew, that premise may absolutely be right now. And you know what? And when I see it, I will shift to it. But, if we go back more, uh, probably over the last 7, 8 years, the correlation between, of course, the commodity currencies and commodities has some staying power for a while, and then they break down. Then they become more current. When it's a dollar move, they all go together. When it's right, so we saw the Aussie struggle mightily when copper was, on its ass. When other commodities were struggling, natural gas was falling because of the huge LNG business with Woodside and other. So
yeah.
it, which is good, but that's what we want to concentrate on. And you may be 100% right. But we love to see when correlations break down, because that's when we get the real movement that we want to see.
Well, I'm not
Because
going.
no, because then forces get unleashed that I think we're starting to see now, but it may turn out to be absolutely wrong. But right now,
I'm not. Yeah, I totally agree with you. I think that the Aussie did a lot of heavy lifting. And the copper ripped, and the whole milkshake theory, and the dollar shortage stuff got people. I never get caught up in that. I just follow price and seasonality. What I saw last week was something that showed a little indifference to the leader, which is the Nasdaq. And in the last two sessions in last week, I saw some, at the moment, only mild weakness in some of the currencies like Aussie and stuff.
right.
Nothing material yet, but definitely underperformance of the Nasdaq. Definitely underperformance of it, and overperformance of gold. And definitely bad vol in some of the stuff that I don't like when stuff goes up. So I start, what do we do with that? Is it going to be, are we still on the reflation trade? The reflation trade is now done, for God's sake. Copper went from 220 to 3. Huge.
Wait. I'm sorry. Say that again. I missed that.
Copper went from 220 to 3. Yeah.
Yeah.
So is that trade over for the minute?
I don't know. It's a good. I don't know. I don't know.
So I guess I'm focused on maybe the other side for a correction. I'm very much committed to your view, I was listening last night to, they're going to reflate this, and they'll do it again. They'll do it again. But is there a correction now? And I'm looking for. You've got to see the currency's strength. You've got to see the dollar strengthen against the stuff that it shouldn't do it against. If the Aussie closes up this week, boom, the market will go up. Certainly if the vol comes down with it.
Oh yeah. But part of the whole complex is again, we're coming into, as Judge just talked about, deliveries next week. Are we going to see that squeeze? And when we saw the gold deliveries being interesting, I'm really not an option trader, but I do watch them. And the gold vol spiked ahead of the delivery squeeze, by the way. So right now, when I checked the gold vols this morning for the August options, it's about 18, 19%. They were up over 60 during all that turmoil. So, and I know because I got caught, I was selling some vol early, which I don't, it's such a non-trade for me. But
I've never sold a vol in my life, so
yeah,
I just watched the vol.
me neither. But I was buying the underlying metal against, and I still got my head handed to me because, and that's where, well, but that's where you ran into all the problems because all the all positions, which were massive, by the way, because that was a way of attaining some extra beta for all these fund managers who, have become heavily engaged in selling vol. Once you have to go.
By the way, with other people's money.
Right. Well, you took the words out of my mouth, Andrew. And then once you have to go for more cash, no, get the hell out of here. And so you're getting blown out of positions all over the place. It creates more havoc. That's one of the great things when these things break down is you get to see, as would say, who's swimming naked. Well, naked means you're out of money because you cannot sustain, being short vol is a highly capital event. People forget that, but it's true. And when things are blowing up around you, that's their problem. They have to go get more. They have to go get more capital. And if the people who are financing you say, "Nah, I don't think so. Time to get out," which is what they do, because again, picking up nickels and dimes in front of that proverbial steamroller.
Yeah.
All right, guys.
Yeah, go on.
Go ahead. So let's just get to the markets for a second. You guys go on. Google, 1486 of the weekly ORL sell stops. AMD, beat, so that's up through the stratosphere.
John, I'm gonna mute myself. I'm just listening because this is far more important than anything Andrew and I are going to talk about for a moment. So
okay. So I think they're going to go get the weekly stops there. This 2930 is going to be a big inflection point in Amazon. They already took them down there again. That was last week's ORL number. And that's still going to be a big technical level for Amazon. Apple, if you get down into the mid 350s here, that's where you want to look for a hold in Apple. Because if they start taking under 355, then that's going to have a big correction. So that's kind of what I'm looking at here right now. Shopify, 898 or 8, let's just say 880, and Shopify is the whole level there. Semis, that they had a tough day yesterday. You got to see where, basically the only thing that's up is AMD. So, it's an opening range trade. They threw it down. So far, Apple's holding. You got even money in the S&Ps, and then you're looking at the, all I'm looking at is this 3,200 level, and then I'm looking at at filling out the entire point and figure down into the 3160s. So you're selling rallies in the S&Ps up into the 3230s. That's a sell before you buy zone, period. And, trade the instrument you're involved in and see what it does. The metals, you had big opening range trades in the gold, gave you a $10 pop. Same thing in platinum, gave you a $14, $15 pop right out of the opening range to the upside. So keep your eye on this stuff. And it's going to be busy all day long. They're going to try it both ways. Tesla, probably coming down into support down here. If they get this thing going the other way, they'll take it up into the 1480s again. And let's see, Nasdaq, Yeah, I like this low in Nasdaq down at the half-day 200 average. So it's a great spot for a bounce. You know, so this is a do not, you don't sell down here. You know, you bottom fish on the long side in any names you want. And the hourly, if it gets 10,400, let's say 55 in the Nasdaq, they're going to try to rally another 50 points. So that's kind of the early game right now. I'm not getting involved in the energies. All right. Anybody else have anything that they want to talk about that they're involved in? You know, MasterCard and Visa don't act that well. Overstock. Penn, this is this area down in here I think we were looking at in Slack before. You know, kind of took out that low. And it's right into the weekly mush. And went right there. So it basically printed the averages that you were looking for this leg down. It's got to get all new weakness under 29 to go again. So whatever it is, you know, you got to trade it on its own technicals. They're still buying Costco, Walmart, Colgate, you know, defensive names on the rotation. 3M's up a little bit. They're hitting United Healthcare. Let's see. And they're buying the regionals. And they're buying the regional banks, but it's a big cap tech that's under duress here. You know, and that's where Google wants to go, right there. They're going to get those stops. And you don't have quite a perfect double top on the weekly in Nasdaq, but that's an ugly enough pattern that, you know, we can go down into the quarterly pivot there. And that's where I think it's going. I think the Spoos are going to the quarterly pivot, the Nasdaq's going to the quarterly pivot, and the metals will stay strong. You know, Lamb's into its first objective here. You know, I'm just not going there with these energy names. Not at all. I mean, that's just rotation to me. DocuSign, you know, every single one of these tech names, these are big blow off areas here. Andrew, you're the one who got us onto this. I mean, this was just an amazing look that you brought us to with that Spoo Nasdaq at a 20-year low.
Yeah. Well, appreciate it. I still don't know why is the dollar yen going down and dollar China going up.
Yeah, well, that's for you and I to figure out.
No, I think it's part of the same trade. I think it's kind of that's that my net on that is I don't want to own risk.
Andrew, I don't know either. There's geopolitical factors playing, of course, on yuan and you know, money moving somewhere somehow in response. But yeah, you would think the dollar yen would be higher with the conflict, right? Because that's typically what we see. And it's
Or, no, or you could argue that no, traditionally yen strengthens on risk off. I mean, look, I asked this question of you last week. I think what's the black swan. I still don't. I personally don't want to be short any comment, any action on of a China on the weekend because at the moment it's just a heightened stuff. They can do anything on a Sunday.
absolutely. But I don't think it's been the currencies have been reflective, and I've talked about this breakdown of a risk on risk off board at all. That we've starting to see the breakdown now. I maintain that we're early in that, but I think we've seen this shift anyway, and especially now that the euro has halted its existential crisis in investors' minds for a while. So I think there is a paradigm shift going on, but again,
All right. If dollar CAD closed at 135 and dollar yen's at 106 and yen in China is at 107.03 and Aussie's at 70 cents tonight at close, is that oh my God?
is that what?
Is that like, oh, we need to, I mean, if that happens, the market will be down 5% or 2% by tonight. I mean, it's kind of the irony of the board tonight, nothing from the close of Thursday into Asia, nothing changed.
Right.
Nothing changed. The yen strengthened, the yuan weakened, and the Aussie, it went up for like about an hour. I watched it.
Yeah.
It went down. Now, I'm not saying it's down. It's down 30 points. I mean, who cares?
Yeah, it's nothing.
But if it goes down by, another percent by the close of today, with the board and the Russell's now having a little go on the downside as we speak, and I mean, it's not a picture. And this was, I honestly think this was picked up when the Nasdaq did a reversal against the Spoos 2 weeks ago. And
I'm not going to say that you're wrong. I'm not going to say that you're wrong, but the yen never rallied on Wednesday. The yen rally is the last 36 hours. So yeah, that is starting to show. But as the yen got all the currencies up again, and with the huge rally in the euro, prior to this.
Excuse me 1 second. Mortimer had a number right down here, 39, 31, 95 or 96 in the Spoos the first time down. So just honor it, okay? Because it can be one of these areas where it just screws everybody. And, you're getting this capital flow, which it's been risk off for the first 20, 30 minutes. And you got to watch and see if this is just not just one algo driven show one way. Okay, you guys go ahead.
No, but that's all, this is so early in this, and we're starting to see we were seeing some of the correlations break down. If you're right, and the equity markets really take a hammering, and I see some correction in the euro, not some correction, pretty good correction, and I see a couple other things. Of course, the commodities. If gold, holds it may not even rally, but if it holds against copper, platinum, and silver today in that environment, I'll say, the market is definitely now concerned about some risk-off event. Why are the equity markets getting hit as hard? And they've done some, pretty good technical damage already this morning, but we're early as Judd just reminded us in the day. And I'm just not seeing it. I listen, I'm a trader. I want these things to test. Very importantly, to test. I'm waiting for those tests because
Go on.
I get more out of that than anything else. I want to see what happens when they test these long-held views.
All right. So
No, sorry.
look at the yuan yen here. That's an ORLW.
No, I've got to put it up. Thank you.
Okay, that's a great call. I hadn't even thought of looking at that. Okay, that's amazing.
Very important.
See, I mean, I kind of, you know, I like matching the seasonality, which actually this week was. I mean, I'm not a vol guy. I mean, don't think that thing I sent out. I've never traded vol in my life. I just look at the vol in the context of if I think something gets stressed, and I get out or I buy more. So if you look at gold last week and in the strength of seasonality, it was going up with a low vol, and I just bought more because it looked pretty simple. And then suddenly, boom, the vol goes up. Everyone wants to own it. Well, I already owned it anyway, but it just gets you some more leverage and you buy some cheaper options, but on the calls. But when gold, like it's doing this week, is outperforming every asset class, I don't want to own risk assets. I don't.
Yeah, no,
Well, you can see the algos again this morning. As soon as we go risk off, they hit the gold and silver and the platinum.
Yep.
And then they start taking money in the miners again. So it's the same deal. I mean, they're doing the same trades. You just got to be aware of what it is.
They may try and hit the goal, but the goal is still on its highs.
Yeah, because they now are thinking, the algos are now programmed that when you get a risk-off scenario, everybody's going to liquidate everything. We're back to that March template, March, early April. The mass liquidation, which caused all kinds of havoc. Because you're coming off of highs, which you were doing back then too. When the gold got hammered, it was coming off multi-year highs on that rally, and then corrected. So there seems to be some inkling to that. Now, let me just call your attention to one thing, because Judge, you just put my eyes there. If you put up a monthly of the yen yuan,
okay.
put up a monthly. Cash, of course, we're looking at.
Yeah, hold on, I'm bringing it over. $200-month moving average.
Well, and just look at it on a monthly basis. When you look at it in that type of perspective, it's
a mess. But this is a very healthy debate. I think we spoke about this last week. Put up gold yuan.
Yeah.
And it broke 3 weeks ago.
Oh yeah.
And I've always, my greatest mentors, and Howell was one of those, taught me if a market closes above, you go after it, Bucker. And look at gold one, and that's what's happened.
Well, look where it wants to go. It wants to go another 20%.
Exactly.
This is Andrew. This is a major statement about the world, right?
Correct.
So the Chinese must be buying massive amounts of gold. I
think they're doing what the Russians did.
Yeah, I agree. And how do I know? Because I'm just looking at that, and somebody is converting.
You're just watching the money.
Exactly. Doing nothing more than that. The whole matrix of my existence is watching the global capital flows and trying to discern amongst them. And that's one of the things that you're seeing.
And you know what? If you look at a seasonality of gold one, guess what? It's the sweetest spot of the whole year to be long.
Really? See, yeah, it's good.
100%. It starts, the gold seasonality and the gold one seasonality, but the gold generally demands most of that attention. All this runs out in about 5 weeks' time. It's got 5 weeks more to go. So that, and I did exactly the same measure, Judd. I measured, well, actually, I measured 35% from when I first bought it, and I think there's 25 more to go.
Okay. Well, I was just I can't count, so all I'm doing is eyeballing it.
No, I think you counted correctly. That is 35 is the net. From if you count that swing count, it's 35%.
You know what, Andrew? That's such a great point to be aware of. The seasonalities, of course, the seasonals are always important. I learned that from the same master you did, and I'm not, and yet I don't keep, because sometimes it just boggles my mind how much I have to do. But yeah, something definitely to pay attention to, and again, that's following the flows of money around the world. I don't need.
That's all seasonality is. It's just an
Yeah.
average of it many years. Yeah, exactly.
Yeah, yeah. But now you're seeing it for potential other reasons, and and all the analysts, when I was on with Spratt with Rick Rule the other day, and talking about some of these issues about moving risk around or anticipating where it's going to move around, by the way. And I think that's what we're seeing and doing across the board. There are shifts. We are in the beginning of some major shifts in capital movements around the globe. I'm surprised, honestly. Well, I understood the fundamental why the dollar was holding up, as other people were arguing ad nauseum, the dollar shortage. But, especially in June when the Fed announced that the swap lines were basically being paid off, they were going to still be available, but they weren't being drawn upon them. So it really told you that the dollar shortage was coming to an end in its immediacy. Now, could we go back to another scare? Yes, but the market seems to be looking at it differently right now, and I think that's what you're seeing. And the gold yuan is telling you, it's as Rod Stewart would say, every picture tells a story.
But I think you can be in both camps. You can be in the concern of the deflation and also respectful of the fact that what they want. I was definitely did exceptionally well in the first quarter of this year, and then I got caught up like we all do, because once your bias gets ahead of the price, you're fucked, right?
Right.
So get respectful of the price. Get respectful of the price all the time, and I wish I was part of this room back then, a quarter ago, because ultimately the price always wins, and you need debate to really, sort of get to fight your own bias.
No, that's what this conversation is all about. If you're not gleaning that, then you're not listening. Then you're coming with a predestined bias that will only harm you. Again, as the old saw goes, when you started trading on the floor, they said if you come with a lot of money and a big ego, you'll soon leave with a big ego.
Yeah, that's one thing. That's one thing Howard always taught me. It's easy to talk when you're managing other people's money.
Oh yeah,
you manage your own money. It's a very different world.
OPM, yeah, it's a very powerful aphrodisiac. All right, I'm going to mute again.
All right.
I'm going to ground, as I say. So the conversation is really good about the stocks. So I'm listening.
Yeah, and again here, that the bigger stuff, a lot of you guys were asking me about the Russell, and I just said it was the wrong way on the spreads. But at the same token, it failed up here at the 50 and 200 weekly cross. Now it's lower on the week. So it can come down. Yeah, it was only being bought on the spreads. That was the only reason anybody was buying it. And once they stop doing the spreads, then the strong leg just gets offered.
So Judd, where are we at on this NASDAQ?
This low down here at 13 or 10,300 is a funky level.
Yeah.
It's got to get underneath that. And it's just kind of.
I had like 10,200 approximately.
It's going down to 10,100 and change.
Okay.
It's going to the quarterly pivot.
Okay,
If
cool.
it's going to the quarterly pivot. And the same thing with the S&Ps, the Nasdaq, it's all going to do the same thing.
Perfect. Thanks.
Whoa. Well, it's not looking good. Somewhere around, it wants to come down here somewhere shy of the 200-week average here at 47.33, David. They got some pretty bad news, so you got to see where it needs to come down here, retest this area, and hold down in here. Yeah, so it's really 47.5 to 46.5 is what you want to see it hold. I mean, that's basically back down to March levels. That's ugly. So they're just selling. Oh, so that's what's going on is they're selling Intel and they're buying AMD big time. So they're just swapping the chip makers. All right, anybody have anything else you want me to let's just go take a look at the spreads. Nasdaq bonds kind of came down to this 21 EMA, which matched up with a 31.96 level that Langer had this morning. So it's just one of those funky levels that can really flip everybody for a while. You got Spoo Nasdaq is right up in this 31 level. That's in all the weekly congestion. So this is going to be a tough level for it to run through. And even on the weekly here, the S&P bonds, they haven't done much. All they've come back is towards momentum here. Here's the weekly Nasdaq bonds and the daily, which has got room to go. So trade the market that's in front of you, whatever the, whatever you're looking at, trade it. Yeah, Euro Yen, the weekly high was basically back up towards that 200 week before that started coming apart again. And it's right down into its daily momentum levels. So you got to see how it trades out here for a little bit. Yeah, Nvidia's coming up for a gap fill. $401.25.
So Judd, for me, it's all about if they fail their gaps or fill their gaps.
Yeah, and they're trying. You know, you got some averages here, but that's what it's trying to do right now. And given that low in the Spoos, it was a good enough spot, and that low on the Nasdaq just to jam everybody and try it the other way. You know, Apple had a big bounce, but you really have to love Apple to want to buy it here. You know, it's a decent enough low. You go back to the beginning of the month where it took off from. You know, they got the stops in Google, didn't they?
Judd,
No, they missed them.
Judd,
Yeah.
I'll let you know the new home sales just came out up 13.8. According to Dow Jones, they were expecting 3.8. And new home sales, 776,000, 74 above anticipated.
Wow. Home builders aren't really reacting to it.
And it probably didn't surprise them.
Well, they were already up and going for the last.
Yeah.
See what the hell did the lumber do? Oh, lumber's up huge. Oh yeah. Here, what screen am I on? Am I on this one? Oh, not cotton. Yeah, lumber. Well, if it's any good, it goes back to $6. It's got to hold today's low to do that. Okay, Peter. Just remember, you used to be one of those lefties. Stan, did you ever take a look at those different settings for the Nasdaq that you liked? Anything you
Not
struck
at
you
this
there?
point because I've been having trouble with my machine.
Okay. Well, we'll get to it next week.
Yeah.
All right. Well, you got your gap filling video. Same thing with Shopify, Overstock. You know, they've all done it. Semis right back up to fill the gap.